Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Monday morning pre-market webcast. Okay, daily chart, and then we'll hop over onto the hourly. What this really boils down to is we're in a range between 2267, 2268, where we had some matching highs last week, and 2247, which has been, it was support a week ago today. It was support on Tuesday. They tested it on Fed Wednesday, overshot it down to 43, but couldn't convert it. It was support on Thursday and Friday. So whoever wins this area between 2247 and 2267, in my opinion, is going to pretty much get the rest of the month, whether that's the bulls to the upside or the bears to the downside. We've got a new weekly pivot today. It comes in 2256 and change. I think that the side which can establish a foothold at the weekly pivot, either as a higher low or a lower high, bulls want to establish that as support inside the range. Bears want to establish it as resistance inside the range. That dynamic, which has served us very well, not only for the last few weeks, but for the last few years, of the side that wins the weekly pivot battle early in the week, tends to control the tape for the week. And as we get into Wednesday, Thursday, Friday, you get more directional action. Okay, I expect this 56 area to get fought over pretty intensely, and that's proving itself out in the overnight. They've been on either side of it, but 95% of this has been above. So you can see it here at 2256.60. It's being tested here. It's been tested all night long. The bulls want to hold it. The bears want to break it. If they can, then it opens up a move down to 47. If they hold and they can get up over 63.64, which was the high from Friday, they can take a look potentially at the 67 area and then 73. My principal concern about the bullish side is this: if you get into shorter term time frames, you'll see that the bulls have left matching highs, double top type action at both 2273 and 2267 to 68. The only thing the bears haven't been able to do after kind of holding serve at those two higher levels is break the key support area at 47. They've tried. They tried Monday. Here you can see all the failed moves into the 47 area. Monday, Tuesday, it's been 3 or 4 times. They've got to break below. If they do, then you get into areas like 39.75. You could potentially go down to 28. That puts us back on the daily chart saying, okay, well, where do we go from here? Ultimately, your destination would be, back to the daily mid-band, which is where the failure from a week ago, a couple weeks ago, Sunday, on the 5th of December, that's where this next ride started. This whole move to 73 started here. If they retrace it back here, I can't stress how critical it would be for the bears to break that, and how devastating to their case it would be if the bulls were to hold it again. If they were, I think the bears would pretty much be on the sideline until January, which is not unusual. But the bears are in a position where they could affect a serious pullback if they can get over a couple of these areas. The bears' biggest problem all month long is they can't finish. They can't finish. You get down to 47 and you get to that one last lower high and lower low that's going to produce a leg down, and they can't finish. So, I say that so that if you are short and it feels good and you're getting this push down and all of a sudden it starts to stall, we say in the room the bears are fooling around. They're screwing around. When the bears screw around, they tend to establish some kind of a support area. You get one higher low, then you get one more, and then then it's, oh, here we go again. And so you have to be pragmatic enough to take profits in those situations. Leave a runner. Get your, roll down a stop on what's left, but understand that it's not all going to happen to the downside, most likely. Okay. All right. Everybody have a fantastic day. Follow us over at Twitter at Princetontrader. Check out the website. Come check out the chat room. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.